Let's jump right in. Snap shares are cratering after missing the mark on both revenue and earnings. Adding to the disappointment was Snap's decision to not provide financial guidance for the third quarter because forward-looking visibility remains incredibly challenging. The company said revenue for the current quarter is approximately flat, while analysts had estimated 18% growth. With us to break down the results and what Snap's future looks like is Mario Stefanidis, VP of Research at Round Hill Investments. Thanks so much for joining us today, Mario.
Yeah, thanks for having me on, Sarah.
Wonderful. Mario, not what Snap investors were hoping for. What's your reaction to the report?
So the results are, I think the street reaction to the results are justified. Snap a couple months ago released their voluntary disclosure that basically said guided down revenue before the next quarter, and that was just 1 month since their previous guidance. So it was pretty clear that there was a deterioration going on in the digital advertising landscape. But I don't think anyone could have forecasted that the deterioration was so excessive, especially when you're talking about a growth company like Snap that is still trading at like high single-digit, low double-digit revenue multiple, to say that they're going to now grow 0% year over year. And it's likely probably going to be even lower than that, given that the last 2 quarters have consistently disappointed estimates. So I think this is a mixture of a Snap problem and a indication of the severe macro headwinds that are being faced in the digital advertising landscape. Typically advertising budgets are the first thing to get cut when companies are deciding how to allocate their budgets during, headwinds or recessionary times. And that's pretty clear today. You see names like Meta and Google down, 3 to 5%. That's not too dissimilar from their reaction last Snap quarter and after that Snap disclosure in May. Although I think it's reassuring that the shares aren't even down more. If you recall in May, I think Meta was down like 8 or 9%. Now it looks like it's down about 5%. It seems like we've come to a bottom, 60% haircut for most social media companies, if not more, seems to be close to the bottom versus the frothy valuations that we had coming into the beginning of this year that led to the dramatic drawdowns that we've seen.
That's a really great insight, Mario. Sales growth of 13% was Snap's lowest pace since going public. Do you think they've peaked?
I think they are definitely in for a period of deceleration. It's hard to say if they've peaked because we're probably approaching an economic trough as well. Typically markets tend to lead the actual economy, which is why we saw things bottom, 3 or 4 weeks ago versus the PMI data and the, manufacturing data that we're getting in now that is quite dismal. That, in my opinion, indicates that we are likely in a recession right now. But yeah, markets don't appear to be wavering as much as they would have been a few months ago when things were still getting repriced. But yeah, for Snap, I don't think that they've peaked. I think the days of like 50, 60, 70% top line growth are behind them, but it's also difficult to say that like 13% is like a local peak. I think in a few quarters, you'll see growth exceed that again, but they have to get through this period of headwinds, and it may be hard given they have to, think about how to reallocate their capital and their resources to stave off, severe pressures within their own company.
Looking or digging in further on this reacceleration of growth, you mentioned a few problems. What do you think are the biggest ones they need to solve?
I think the biggest one is still the impact of Apple's IDFA changes. And this is something that Meta is facing as well, primarily, through their Facebook family, within their family of apps. Apple's changes to tracking led to only 5% of people choosing to voluntarily opt in and provide their information with advertisers. And given that, about half of people in the United States use Apple devices, and the United States has 8 times as high the monetization potential than Europe for advertising. The headwind from that was severe, and Meta is in the process of trying to solve it. Not only for Facebook but also for Instagram. Snap appears to be a couple notches behind, but that is still a problem that has to be solved. I think the other issue is Snap's. So Snap has been trying to go in multiple directions. Evan Spiegel, Snap CEO, said a few quarters ago that Snap was primarily a camera company and rather than a social media app. And I think part of that is due to the company's focus on hardware now, given that they see challenges within the advertising market. As you may know, Snap is creating a family of drones with cameras attached to them that they're selling for like $200 or $250 in a pretty big pivot away from their core social media business. I think what they have to solve is what kind of company are they? Like Meta explicitly rebranded from Facebook to Meta to focus on the metaverse, and they've been reprioritizing, most of their resources towards that goal. I think Snap needs to have kind of this like internal realization of what sort of company are they? Are they a social media and advertising company? Are they a hardware and a camera company? What exactly is their mission, and how can they best drive revenue growth while maintaining profitability for shareholders?
Yeah, I really think you nailed that question. And in full disclosure, I was one of the crazy people when Spectacles first launched that went on the scavenger hunt and drove all the way to the Grand Canyon to get a pair. So I'm definitely very curious about where they're heading. And I'd be remiss not to address the elephant in the room, attributing their struggles with the emergence of TikTok as a social media heavyweight. How much do you attribute that to what's happening currently?
A lot. And I think that's what came through the Facebook Reels disclosure that Meta gave on their last couple of quarterly earnings. TikTok is really eating a lot of the short form video pie. And for Facebook, the good thing is there's other advertising mediums on that platform, and then for Instagram, there's other advertising mediums. Snap is primarily all short form video content. So when you have an incumbent like TikTok come in, that is doing I think it's private, but I think it's like 40 or $50 billion of revenue a year. That has to come from somewhere. It's a finite pie, and while they may have expanded the pie a little bit, they're still eating everyone's lunch, so to speak. And Snap is, that's one of their biggest detractors. I think for them to solve this issue, they need to, again, try to pivot away from their core business, move away from short form video as much as they can, and perhaps reprioritize on AR and VR and other metaverse technologies, or move away entirely and pivot to some sort of longer form media.
Wonderful. Well, let's end on a positive and look at maybe any silver linings to take away from Snap's report. What would be one or two of the good things we can focus on?
Well, I think the valuation now looks super conservative. At $10 a share, I think they have become a takeover target now. I believe their market cap after the move down today is about 17 or 18 billion. Down from 130 billion just a year ago. That's when you start to see takeover interest, and it's hard to speculate which companies may be interested in that. But just think of your favorite media company, or your favorite social media app that may be looking for a takeover. I think another positive is, again, I think this is likely the trough of Snap's issues. As they solve the IDFA problems that Apple has caused, and as they reorient to something more profitable, I think you should start to see a pickup in growth. It's hard to imagine too much more of a deceleration, especially given that their monthly active users rose quite nicely in the quarter by double digits.
Wonderful. Mario, thank you so much for sharing all of this with us today. It's extremely helpful, especially as we become more educated investors. Where can people find you online and connect with you?
Sure. So the best place is my Twitter. My handle is at covered_call. And you can also add me on LinkedIn. My name is Mario Stefanidis.
Wonderful. Well, thank you so much. And thank you to all of you listening. Please have a safe, happy, healthy weekend. And we will see you back here next week. Same time, same space. Thanks again, Mario.
Yeah, thanks, Sarah.
If you would like to see more content like this, subscribe to our channel and download the public app where you can listen to these sessions in live time.